Hi, Dave Feldberg here with Coastal Real Estate Group. I'm here with Beny Rabuchin with New American Funding. And we wanted to talk a little bit today about the difference between floating a rate and locking it.
Good question. So let me go into about what those mean. So when you are in a position to buy a home and your offer is accepted and you're now in contract to buy that home, or if you are refinancing your home, that application has started, at that moment you have the ability to either lock your interest rate in or float your interest rate. Floating an interest rate means as the process is going along of you getting approved for the loan, the interest rate is floating based on whatever market rates are. So and this is a much riskier way to approach this. So as volatile as our market has been, this is not recommended to do. Those that like to live on the riskier side would float a rate. They would watch that rate throughout the process of the loan process up until we're about a week of closing. By that moment, they have to have locked in a rate. So essentially every day they're watching the rate to see what they do. Locking in a rate, which is preferred to protect yourself from potential market swings.
Sure.
As soon as you enter contract, you can lock an interest rate in. That protects you from any market swings, lower or higher. So this way, if you like your payment based on that rate, my recommendation is lock that rate in, protect yourself from any potential market swings that can happen that could affect that rate from going higher.
Just a little more conservative, lock your rate.
Absolutely, absolutely. In this market, yes.
Great. Good tips. Thank you, Beny. Dave Feldberg, Coastal Real Estate Group. If you have any questions about floating or locking your rate or anything about mortgage, please give us a call. We'll connect you with Beny. Thank you.